Sharmila Joshi, independent market analyst, is now with us. Sharmila, what do you make of the markets? Recent correction is a healthy one?
I don't know about healthy, but I think it is sort of playing out along expected lines. I mean, given the fact that you do have an important global event next week, there is a certain amount of uncertainty over that, and we do see that, for instance, we are sort of following the trend, whether it is Europe or whether it is Asia, for instance, this morning, and you're sort of taking your cues from there. So this is not really a domestic correction, but it is more because of what is happening internationally. And I think even your FI numbers, etc. Those do indicate that the buying is not there, for instance, from the FI front. So I think till this Brexit event is out of the way, this is the kind of market that we can expect. I don't really expect markets to go down too much from this current level, but at the same time, I think even if they were to sort of give a bounce back the way we did yesterday, you will see some global event that could again sort of drag you lower. So it is, I think, likely to stay in this range.
Brexit will be an important event for all the emerging markets?
Very honestly, I don't think so, because I think that that remains to be seen. And even if they do exit, I don't think that it will be very significant from a emerging market point of view, and things could go back to normal, say for us, once things sort of settle in Europe. But I think from a European perspective, it will be a big event because at the end of the day, their markets are now interconnected since they're all naturally, with so many offices, financial sector offices, especially being in London, etc. So you don't know the roadmap for that going ahead. But from an emerging market perspective, I think not too much.
Right. As far as currency movement is concerned, is that something which will keep the markets, worried, say, if the Brexit event goes through with an exit?
Yes, definitely. I think, everything then will sort of, you will take your cues from all the events that happen sort of. So whether it gets reflected in currency, whether it gets reflected in other commodity prices or direct equity, I think all of those will have an impact. So I think we just have to now really wait for next week and see how this one goes.
Right. As far as private banks is concerned, they are correcting today. Is it an opportunity to buy, or valuations are still stretched? And, returns can be very moderate from here. So if it falls more, it could probably lead to better returns?
Yeah, I would broadly agree. And I think it's also because somewhere, buying seems to have shifted to PSU names, given RBI's new norms. Once again, market is sort of thinking along the lines that leverage companies could be sort of playing that game, that which could be the leverage company that could be part of this plan, and therefore there is certain amount of buying in those leverage stocks as well as the PSU banks, which market sort of things will get relief. But I wouldn't want to go down that road, and I would really just stay away from the banking sector as a whole. And if I had to buy something, I would still buy something in the private banking space.
Right. And what would be that private sector name that you would look at?
I think, stocks that haven't really participated in this rally. And I think for good reason, but still I think ICICI Bank or an Axis Bank would be where I would look at this price.
Right. So, ICICI Bank and Axis Bank, both of these names are banks where there are certain issues, and that's why probably they have not rallied as much as something like a IndusInd or a Yes Bank. You think that's the play that you're playing, that things may not be as bad as the street is predicting?
More that a lot of it is in the price. And, as you said earlier, like a lot of these private banks have had such a huge run up post good numbers that if you're going to see a correction in private banks, then you may as well, these names could correct a little more because they've run up that much more. So it then makes sense to sort of hold back buying a Yes Bank or an IndusInd Bank. And as I said, if I had to buy something, purely based on valuation, it would be an ICICI Bank or an Axis Bank.
Right. How would you look at the NBFC space? Is NBFC something that you would, want to take a bet on after results? That's the Q4 numbers. Not that numbers were great, but probably NBFC has seen great buying.
Yes, so I think that has clearly been my trade, these last couple of months. So whether it is, SKS and all those, they've obviously had a very huge run-up. But I think even stocks like a Manappuram or a Muthoot Finance, or I think on the housing finance space, I like an LIC Housing Finance. That's really not done much. So that's a name I continue to like. So, stocks like that rather than, buy something in the banking name. M&M Financial, Shriram Transport Finance. These are the stocks that typically I've been talking about.
Right, but NBFCs, still there is a lot of, still you like that because the run-up has been quite sharp. It's been sharper than the banking space.
Well, there's not been much to really recommend buying stocks in bank stocks in the first place. So, given the fact that numbers were good in the NBFCs, it stands to reason, I think. But yes, in certain cases, they are a little ahead of valuation. So, it might be better to wait for a little bit of a correction before buying.
Right. As far as some of these contra calls are concerned, something like a banking, something like a metals pack. So maybe a Hindalco, maybe a Vedanta. Any contra call of 40-50%, is something that you would. I mean, they've rallied like a Vedanta was 60 rupees. I was just looking at the price. It is already up 40-50 rupees, almost 100%. So would you just want to give it a pass as you have missed it at the lower level?
Yes, I think in any case, I would give Vedanta a pass. But if I had to look at something in the metal name, then I think, I did look at Hindalco, for instance, favorably when it was around at 90 level and you got a good set of numbers. So maybe a stock like a Hindalco or a Tata Steel or JSW Steel, something like that, where JSW Steel, for instance, post MIP, you did see that, there was a good demand for their products domestically. So that sort of made sense. So I think stocks like that rather than, I wouldn't go the way of a Vedanta or some of the other leverage names.
Right, but majority of the rally in these names have happened now. They're not at distressed valuation. So I mean, the confidence that it may give a very near-term or short-term bounce is not there.
Yes, absolutely. But I think what is also happening in the market is that you are seeing some sort of a buying come into a lot of the commodity space across. So whether it is soft commodities, whether it is metals, you are seeing that entire trade being on the commodity side. So maybe a little bit more because of that. But yes, I think broadly, if you were to look at it from a purely valuation perspective and also going ahead, a lot of the good news or expected good news is now in the price.
Right. So there's no point chasing them. So if you get a bad day, you would want to take some weightage or, they correct 20-30%, probably a little bit something that you may buy, but otherwise you're not chasing.
Yes, I think like if you were to ask me, do you want to enter metals at this time, after the run up, then I'd say no.
Right. How do you think essentially, something like, largely a pharma is placed in? So, we've seen corrections, we've seen select name doing well, select name going down, but no doubt, in last 18 months, there has been an underperformance. Would you start to look at pharma? Are they getting in that range where you're comfortable in terms of valuation, that growth, whenever it returns, these stocks can re-rate quite meaningfully?
See, I think more than these stocks re-rating or doing anything meaningful, I think the way I look at it also is that in some of the sectors, like, we were just speaking of metals, the run-up has been so sharp and fundamentals sort of don't support it beyond a point. Then for another set of sectors, the concerns are really outside their control sort of. If you were to talk of banking, then the NPA issues and all are not really something, those sectors are going through so much stress that there is very little actually that a bank can do at this point in time to recover those loans. Then I think, if you had to buy sort of safety and also look at valuations where, they haven't really done much in the last couple of years, then pharma comes to mind. But I think the only caveat here is that your trade has to be reasonably long term because I don't see these stocks going up in a hurry either. So you need to be patient. You need to sort of think
that India pharma story is over?
No, absolutely not. So just coming to that, I think, what we are also seeing is that a lot of the companies are sort of getting out of those US FDA issues, etc. So I think going forward, I would be positive. But you have to give it, I think, at least a couple of quarters before you think you can make any money.
Right. So again, not in a hurry to buy.
Yes, but as I said that, if something had to be recommended, if market's going up and, you want to sort of participate in the market and you want to buy something, then I think pharma is a good sector for me.
Right. How would you look at the auto pack, something like a Maruti? So it's going down because of yen today. It's down about 4% odd. No doubt yen has an impact as far as, Maruti is concerned because of their imports. But do you think it's a very, very big concern, or from 120 to 105 already has happened? So majority has been priced in and street has started to look at, slightly worse yen numbers?
Well, yes, I think yes and no. But, very honestly, Maruti is not on my buying list. So I have not really paid too much attention to this yen trade. But it's not a stock that I've really recommended or bought for the last couple of years.
Right. As far as something like a Tata Motor is concerned, we had a guest today in the morning which told us that it's trading below 10 PE. It's one of the cheapest stock in the Nifty 50 pack. This and probably ITC if you compare it to some of the other consumer names. Would you want to buy these two names because of valuation?
I would buy Tata Motor DVR. I think that's been my sort of recommendation for the longest time.
Because that's even
now.
cheaper.
That's even cheaper. And now it's in the Nifty. It has the volumes. There's no reason for there to be this big discount cap. And I mean, I honestly have never really used my voting rights. So from a retail sort of perspective, I think DVR is the perfect space to be in.
Right. But again, despite the up move, I mean, just a few days back, it was around 230, 240 a few months back. So it's done well. It's not that it's not done well since the time that you've recommended it. Still, you would buy?
What, the DVR or
yeah.
see, I think when you saw it at that level also, the concerns were overdone because it went down purely on the back of negative news from China, etc. And that still remains actually. It's not that that's gone away. It's just that the numbers from the rest of the geographies have been good and markets reacted positively to that. And until you see a serious blip on that front, I don't really see why the stock should really go back to those levels unless there is some other very big concern that's around the corner. So I think my target for Tata Motors would be closer to 500 levels, which is why I'm saying buy the DVR because it still makes sense, much more sense to buy DVR at this price than buy Tata Motors.
Right. As far as something like a L&T is concerned, after the recent up move, is it worth chasing it because it's been steady around the 1500? There is no selling pressure as well.
Yeah, so again, I think there the same sort of question that you need to ask yourself that if your investment horizon is long enough, then you can look at buying it at this level. But I don't think you are. I mean, unless you see that retracement back to the 1000 levels that we saw a couple of months back, and just one good result or other one good sort of management sort of sounding confident about orders going forward, etc. Good guidance, and you have the stock reacting and going back to 1500. Yes, if that view was a year plus, then you would buy at this level. Otherwise, you just wait for it to correct really to buy into it.
Right, but again, it's a name that you would be positive on.
Absolutely. I think it's a name to be positive on. Only as you said, the run-up has been too sharp.
No, I mean directionally, numbers-wise. Numbers-wise, valuation, stock may do whatever it had to, but would you be positive on the business?
Yes, I would be positive on the business. I am only saying that you need to wait for a better price because this price is ahead of valuation.
Right. Adani Ports is a name which met a couple of brokers a few days back, and they said that they know about the concerns of loans and advances given to related party transaction, and they are looking to reverse that. Would that be a big reversal that you're looking at, or it's something that now you would not much care, or essentially the street has already derated the name, so just because they are reversing it, it would not see a re-rating?
No, I'm sure there would be, if they were able to reverse that, they would see some positive impact of that on the stock price. But as you said, I think this is not a name that I've really tracked or liked, so it's not on my list at least.
Right. Sharmila, thank you so much for taking out time for us. Hope to see you again.